Hi, and thank you for joining us here at Tax Talk UK, where we talk about all things tax and consider other important aspects of working for yourself, running a small business. Today, I'm going to talk about budgeting. Before I do, if I could please ask you to take a moment to subscribe to our YouTube channel. That way you'll easily be able to refer back to this information if you need to, as well as finding other information on a whole wide range of topics, all aimed at supporting you in your self-employment. You will find everything organised within our playlist. So if you look for the playlist that describes your situation, and in that playlist you will find videos with information that hopefully you will find helpful to you. So back to budgeting then. So what is a budget? What do we mean by budgeting? So really, in simple terms, when we refer to budgeting or setting a budget, we're simply estimating how much income we think that we're going to have over a set period of time, and what expenditure we estimate that we will incur during that time as well. So depending how complex or how simple your business is, will obviously determine how easy it is for you to estimate your budget. So the thing that I always would say is when you first start to estimate, it's the same as everything. It's something that will be new to you if you haven't had to estimate your income previously to plan ahead, or your expenditure. Then it's going to be be harder for you to work out an accurate estimate. As you get more comfortable with this, then obviously you're going to become more familiar with being able to more accurately estimate. And of course, if you're just starting your business, then your estimates are literally going to be estimates, because you're not going to have any historical information to help you estimate. So the important thing to remember is an estimate is just that. It is an idea, what you think is going to happen. So if you don't have any idea at all, you just need to try and think of some way of working out what you think is reasonable that you will earn. And then as time goes on, and you will be able to compare your budget to what actually happens, and then you might think, oh, I had a lot more income, I had double the income. Why was that? And that's the important thing. It doesn't matter that the estimate wasn't accurate. What's important is that you understand why the estimate wasn't accurate, what created that difference, because that will help you to learn, and your estimates going forward will become more accurate. And the same with your outgoings, exactly the same. So some things will be quite easy to work out, because you might have for your overheads, for example, you might have a fixed cost every month, so that will be really easy to work those out. The things that will be difficult will be things that are relating to your sales, your cost of your sales. Those will be the things that will be harder, the same as your sales, because the more variable things are, of course, the harder it is to estimate. So for that, obviously you could work out what percentage of your sales you expect to spend on cost of sales. If you're selling products, then obviously you would know this from your markup. And again, it is only an estimate. So if you make things too complicated to work out, and you have to spend 2 full days every month just to be able to estimate your figures for the next month, other things are going to be more pressing on your time. It's not going to happen. So you need to keep things in balance, and make sure that you're getting the most accurate estimates that you can, but also that in balance, it's reasonable amount of time that you're spending, and you're not making it so hard that it's an unreasonable amount of time. And then things like your taxes, of course, if you've got an estimate of what you expect your sales and your cost of sales to be, then you'll be able to work out an estimate of your profit, and then you will be able to work out an estimate of your taxes and your VAT if you are VAT registered. So as I mentioned before, the important thing is to have a go. And even if initially you think, oh, I was just completely making these figures up, I've got literally no idea, then just, sort of go with it, document it. At the end of the month, look back, how accurate were your estimates? How close were they to what actually happened? And why were any differences? Was it because you've got seasonal work? Did something happen? Did you have to pay more for your costs? Did you not find the best prices? Or was it just actually no, I just overestimated or underestimated how much sales that I would take in the time. So once you've worked out your estimate, it's up to you how far advance you want to budget. Typically, most people would be looking at budgeting a year in advance, because that would have a whole cycle of quarterly and annual events and taxes and that sort of thing. And of course, the further ahead that you budget, then the more time you've got. If you find actually I'm not going to be able to, I'm not going to make a profit on what I'm budgeting, then you have time to deal with that and work out why that is, and to take sort of corrective action. So you might typically have a budget that says, for each month for the next 12 months, this is what I expect to have income, this is what I expect to have my cost of sales and my overheads, this is the profit, and so these are the taxes, and these are when I expect to have to pay them. So it can be a little bit complicated when you start to think of so what I've been mostly talking about is budgeting in terms of how much income you're going to have and how much expenditure and cost of sales and overheads, which of course is your profit. But then when we start to look at when that money is going to come in and go out, then that is cash flow. So you might have two separate budgets. You might have a budget where you're actually forecasting your income and your expenditure to know how much profit you're going to make, and you may have a cash flow, which is a separate thing that is literally a track of when you expect the money to come in and out of your account. So it can be a little bit complicated if you don't be clear what you're trying to achieve. Are you trying to achieve a budget to know that you're going to make a profit, or are you trying to achieve a cash flow? And again, if your self-employment is very basic, and perhaps if you're a service industry, so you don't really have too many cost of sales and minimum outgoings, then of course a budget's going to be very simple, and the cash flow will sort of match that very closely. And of course we talk about cash flowing in a different video, so I won't go into sort of detail now. But going back to your budget, so you may decide, actually this is all really new to me, so I'm going to actually do I'm only going to do a budget for the next 3 months, and sort of build up. Don't feel that you have to be confined by any set thing. It's what works for you. So it's better to do a 3-month budget that you actually do and keep on top of, and always have your 3-month ahead budget, rather than trying to do a 12-month that you haven't got enough information for, you find too difficult, so it doesn't actually happen. So as everything, it's about understanding what you're trying to achieve and tailoring it specifically for you. So hopefully that helps give you an overview of how to actually construct your budget in the first place. And then of course you would want to monitor, so with your profit and loss, you would want to monitor that against you know, what actually happens. Now as we know, a lot of small business are needing to move towards Making Tax Digital, so we'll be looking at Making Tax Digital software if you're not already using that. And most of the softwares will have a function where once you've decided your budget, so once you've decided what you think you're going to have incoming and outgoing for the next however long your budget is over, you will be able to enter that into your software, and then your software will generate reports for you, which will save a lot of time in you having to work out. And what I would say is, once you get to the end of, so say for example, if you've done a 12-month budget, you've entered that all into your software, you get to the end of month 1, you don't especially need to go back. You do need to review, like I talked about before, to understand why there's a difference to what you budgeted for, to see if you need to change any of the future months budgeting. But you don't especially need to go back and change the budget, because then it becomes not a budget but just a reflection of your profit and loss. So just try to do your best, and remember that it is just an estimate. It's your best estimate, and you will get more confident and more accurate with that. Don't be disconcerted if you get to the end of the first period and you've been way off. Just as I say, use the knowledge of looking at why it was different to help you, and then before you know it, you'll be sort of flying ahead on that, and you'll know exactly what you're doing, and you'll find it much easier to predict. But you just have to start somewhere, the same as everything. So hopefully this helps you to understand a little bit on budgeting, and thank you very much for watching. Thank you. Goodbye.